in the prior year as intangible assets. The company this patent gives Hellman the exclusive rights to manufacture specialized wet weather tires for 4 years. In preparation to the manufacturing of the wet weather tires, this year the company conducted a review of plant machinery. As part of that, there is a surplus plant and machinery was sold, resulting in a loss of disposal. Fine, okay. In May 2005, the company financial controller was dismissed after it was alleged that she carried out number of fraudulent transactions against the company. She has threatened to sue the company for unfair dismissal as she disputes the allegation. The company has only recently started to investigate the extent of fraud. Means there was some unfair dismissal is there, and she has threatened to sue for unfair dismissal. A problem occurred 2005 during production of a significant batch of tires which affected the quality. The issue was identified prior to any good being dispatched, and management is investigation whether the issues has been rectified and the tires were subsequently be sold. What they say? A problem occurred in June 2005 during production of a significant batch of tires which affected the quality. The issue was identified prior to any good being dispatched, and management is investigation because it has been identified before it has been dispatched, whether the issues has been rectified and tires has subsequently been sold. Herman, finance director, informed you that a significant customer was granted a payment break of 6 months. It has been experiencing finance difficulties. Herman company maintains an allowance for receivables, anticipated that it will remain at the same level as prior year. Can we grant an extension of 6 months? What is the maximum payment days? 60 days. Is that maximum payment days are 60 days. How much they are saying? They are going to give, they are giving almost 180 days. Is it? The report to management issued by Brooklyn following last year audit significant deficiency regarding Hellman's purchase cycle. The finance director has informed you that company intends to restructure debt finance after the year end and looking to consolidate its loans to reduce the overall cost of restructured debt finance. Looking to consolidate its loans to reduce the overall debt borrowing. As a result of planned restructuring of debt, Hellman has not paid its shareholders a dividend this year, choosing instead to undertake a bonus issue of 50 equity shares. You have been asked by the audit manager to complete the preliminary analytical review. Okay, we'll go one by one. Okay, we'll go one by one. Describe what is the auditor's responsibility. Just write down on the paper for your information. What is the auditor's responsibility in prevention and detection of fraud? Can you tell one or two things? 4 points. Each one, at least you can tell 2 points.
To gather sufficient and appropriate evidence.
To get a sufficient and appropriate evidence. Okay. Obtain, write down. Obtain, everyone write down. Listen carefully, it makes lot of difference. The first, what is the auditor's responsibility? Obtain sufficient and appropriate evidence. You will get 1 mark straight away. Okay, you will get 1 mark straight away. Just if they are asking describe, is it right? They are asking describe. What is the ISA standard?
SA 500.
ISA
500.
Write down, we will check. Okay, write down, we will check. Fine. Now, write down, we will check. Fine. The next, anything else? Second one. What is the second one? Yes, Laila and Gaita. Tell what is the auditor's responsibility.
Make sure that financial statements are prepared in accordance with applicable financial reporting framework.
Fine. Write down there. The financial reconfirming that financial reporting has been done as per the applicable financial reporting conceptual framework. Next, third one.
Preparing audit reports.
No, what is the preparing?
Audit reports.
Fine. Before preparing audit report, what you will do? Preparing audit report is the end. Okay, preparing audit report is the end. Before what you will do? In order to prepare audit report, what is the first thing you will do?
Extensive procedures.
Is it? What you will do? You will obtain reasonable assurance. Is that? Obtain the assurance that the financial statements are free. Okay? You have to obtain, you have to give a reasonable assurance. Okay? That the financial statements are free from any material misstatements. Is that? You have to get a reasonable assurance that it has been done with a from any, there should not be any material misstatements. Okay? Anything else? Anything else?
Professional skepticism.
Professional skepticism. Write down. Maintain professional skepticism. Maintain professional skepticism. Anything else?
Increasing the materiality level.
No. First you have, what you will do, you will assess. What you will do as an auditor? You will identify, assess risk. Okay, first you will identify and assess the risk of misstatements. Okay, they are talking about fraud and error. Keep it in mind. What is the requirement? They are saying that in prevention of fraud and error, the requirement is with reference to. Is that the requirement is with reference to fraud and error. Any standard is related to fraud and error, you remember?
240.
Give
240.
recommendations, sir, for
Pardon?
also give recommendation regarding to improving the internal audit.
Nothing internal audit. Auditor's responsibility is external audit. Don't get confused. You should not involve internal auditor. Nothing is there. Forget about that. That is a completely different situation. Here we are only focusing on external audit. What is the standard for fraud and error? Auditor's responsibility. Auditor's responsibility relating fraud and error. ISA how much? Just now Mariam said.
To design and implement appropriate audit procedures as well.
Yes. What is the standard?
240.
240. Is it 240? Audit. See, when you are doing the auditor's responsibility to conduct the audit in respect to fraud and error with a financial statement is ISA 240. Fine. What they say, you have to obtain reasonable assurance that the financial statements are free from errors. Is that whether it has been caused by fraud and error? Is that now what happens? Is it? Are you okay with this?
Yeah.
Now, what we are doing in order to prepare financial statements, the auditor has to obtain sufficient and relevant, sufficient and appropriate audit evidence. Is it to assess the risk of related to fraud and error? Always you have to mention, if you are writing 3 different points, 4 different points, we have to maintain that with reference to fraud and error. Is that now if there is a fraud and error, there should be audit response will be there. The auditor must respond appropriately to fraud. Okay, if they have identified any fraud and error during the audit, they have to respond. Is that write down the things point by point. The auditor must respond appropriately to auditor to fraud identified during the audit. Okay, next. Anything else? What ISA 240 says? What is the auditor's responsibility? ISA 240 says that the entire audit team should be aware of risk and responsibilities. The entire audit team should be aware about risk and responsibilities of the audit. Is it for the fraud and error? Entire is not one person. Is it? The entire team is responsible. In some cases, what happens? See, that is the reason we are having the narrative notes. Is it documentation? In documentation, how many methods are there? 4 methods are there. Narrative notes, flowchart, questionnaires, and what are the things? Internal evaluated questionnaires. There are 2 things are there. One question. What is there? What are the documentations methods are there for?
Narrative notes.
Not written notes, narrative notes.
Narrative notes, sorry.
Next.
Internal control questionnaires.
Internal control questionnaires and internal evaluated controlled questionnaires. Is it right? Internal evaluated control, and the first one is flowcharts. Is it? The first one is flowchart. These are the things that has been going to be reflected in with respect to the documentation. Anything else? Anything else?
Decreasing the materiality level in these areas.
Next, good.
The auditors are not primarily responsible for detection and prevention of error and fraud.
Next.
That's it.
Fine.
Also to check if the financial statements are free from statement material.
Financial statements are free from
material statement.
Material misstatements. Is it? Material misstatements. Fine. Okay. Next. Okay. Next. Fine. See what we have done. We are talking about professional. We are talking about maintaining professional skepticism. We are talking about that we have to discuss the risk and fraud with the entire audit team. Is it right? If somebody is not present, we have to inform them. Okay. We have to inform them. We have to assess the risk of material misstatements due to fraud. Is that we have to obtain reasonable assurance that financial statements are free from material misstatement. Obtain reasonable assurance from our client. Okay. Next. Is that these are the things. Okay. We will come to this. Now, what is the, I am not asking anything else. Just calculate gross profit margin from this very quickly. Don't write, only I want result. 4,500 divided by 23,200 times 100. How much you will get?
19%.
Next. What is the inventory turnover ratio? What is the formula for inventory holding period?
Inventory divided by cost of sales.
Closing inventory, write down. Closing inventory divided by cost of sales times 365. Write down on paper. Closing inventory divided by cost of sales times 365. How many days you will get? Tell me for 2005 only.
41.
Okay. Gearing ratio. What is the formula? What is the formula for gearing ratio?
Debt divided by equity.
Debt divided by equity. Debt divided by equity plus debt. Okay. Debt divided by equity plus debt. Debt plus equity. Okay. How much is the debt? They have given long term and short term both in one. Is it? They have given long term and short term both in one. 13,000. 13,000. Equity is how much? 10,000. 13,000 divided by 10,000 plus 13,000. Okay. 13,000 divided by 23,000. How much you will get? 13,000 divided by 23,000 times 100. How much?
56.
56%. Fine. 56%. Okay. Next. That is the gearing ratio. Okay. The gearing ratio is there. Debt divided debt equity ratio is there. So many things are there. Fine. Next. What is the interest coverage ratio?
Earning for interest and tax divided by the finance cost.
What is the interest coverage ratio formula?
Earning for interest and tax divided by the finance cost.
Yes. How much you are getting for the first year? First year how much? Profit before tax they gave 450. What is the formula? Profit before interest and tax. Profit before interest and tax means 450 plus 290. Okay, 450 plus 290 divided by interest cost or finance cost. Both are same. Is that? Both are same. Means how much you will get? 450 plus 290. How much will it will be? 450 plus 290. It comes to how much? 740. 740 divided by 290. How much?
2.5.
Times. Okay. This is in terms of times. Okay. The first one will be in terms of percentage. The one is in terms of days. The third one is in terms of percentage. And the fourth one is in terms of times. Okay. Very clearly. Okay. Very clearly you have to differentiate it. Is that? Now you have done. Now we have done with respect to that. The first one is with respect to responsibilities. The second one is with respect to the ratios. We are not going to do anything else. We will write this. The interpretation we will write wherever it is needed. Now what they are saying, use the information provided and the ratios calculated. Is it? Use the information provided and ratios calculated. Describe 8 audit risk and audit response. Is it? Describe 8. What they have given the structure. Is it? They are given a 2-columnary structure. One side there is a audit risk, there is a audit response. Okay. Now what we have to do? What we have to do? They say that now the first point is this one. Is that the first one? They say that the assumed rate of return is how much? Assumed rate of return is 10%. Is that they want to reduce to how much? They want to reduce to 5%. What will happen if you are reducing? This is the audit risk. They are reduced. This is the first audit risk. The first audit risk is go step by step, paragraph by paragraph. The director has historically assumed a return rate of 10%, but he wants that it is more excessive. He wants to reduce it to 5%. What you have to do?
We have to discuss the reasons with the management.
Yeah, we have
The
to
basis of the
discuss the relevant assumption. Is that you have to discuss what is the assumption why you are reducing the percentage from 10 to 5. Is that 10 to 5? Now they say that it is for the last 60 days. Okay, they are talking about the last 60 days. Now when you are talking about the last 60 days, review the things with respect to 60 days. Review for the last 60 days. First you have to see what you have to do. You have to discuss the basis for revalued assumptions. Okay, first you have to discuss with the this is the first point. Response. Second response is what? Review what happens for the last 60 days, whether it has been decreased or it has been increased. Compare with 10% and 5%. Okay, now if there is any variation, that is the second response. Third response is discuss with the variation. If there is any variation is there, just check with the finance director. Okay, response is what you are doing. Got my point? Response is what you are doing. First, what is the response? You have to discuss with the management the reason for reducing the, what are the assumptions, why they have why they are assuming that they have to reduce from 10 to 5%. Second thing is they have to review what happened for the last 60 days of the credit period and is there any reason for reducing. The third one is you have to discuss if there is any variation, you have to discuss with the management. Fine? Are you clear about this?
Yeah.
Next, what they are saying now, second point. They say that the company has purchased patents. Is that the company has purchased patents? How much they have purchased patents? They purchased patents for 800,000. What is they have purchased patents for 800,000, and they say that they have the right for how many years? 4 years. Is that they have the right for 4 years. Now what is it? They have the right for the 4 years. Whether we have to amortize it or we have to make an impairment. IAS 30.
You have to amortize it.
Pardon? Amortize it. Is it right? Why? See, if there is a limited life, amortization. If it is a unlimited life, it is a impairment. Is that? If it is a unlimited life, it is a impairment. They say it is going to be for 4 years. If it is a 4 years, as per IAS 38, intangible assets. Okay, the intangible asset we have to mention. intangible assets is IS 38. You have to amortize it over a period of time was 4 years, and we should know whether it has been, if they have not done, definitely if they are not amortizing it, the profits will be overstated. The company purchased, what they say, in preparation to manufacture of the wet weather tires, this year the company conducted a review of plant and machinery. As part of the review, surplus items of plant and machinery was sold, resulting in a loss on disposal. See, they have sold surplus land, is it right? Now they have sold surplus land and there was a loss. When if they have sold it, what we have to do, what is the response we have to do? We have to recalculate, is it right? We have to recalculate and we have to see the appropriate evidences. Is that we have to recalculate the loss on disposals and what are the agreed terms of supporting documents. Fine. In order to know, then we should know that whether the loss has been actually correctly stated or it has been overstated or it has been understated. Okay, this is point number 2. Okay, the point number 1 is with respect to the returns. The point number 2 is with respect to the losses. What is the point number 3, paragraph number 3? The financial controller dismissed it as alleged that she has carried number of fraudulent activities, and the investigation is a number of fraudulent activities. She has threatened to sue the company. The company has only recently started to investigate the extent of fraud. What we have to do? What is the audit risk? First tell me.
Reporting provision.
Fine. There is a risk that...
Contingent liability.
Good. Exactly. I am taking your points. Okay. Anything is there, I will make adjustments. Yes.
So
That
the
you-
fraud-
Yes, Laila.
No, it's okay. Let Mariam finish.
Yes, Madhyam. Yes. Don't waste time. Yes, Madhyam.
the fraudulent activities occurred in which area?
They have mentioned any area?
Okay, so there's the risk of not quantifying the misstatements.
Okay. They have not identified which area. Is that they have to write out. Is that if they have to identify what happened, they have to identify in which areas. They have to identify. We are not talking about we should not give which area. They have to identify which area, which areas there was a fraud. Okay, and if this has been identified, fine. Okay, no problem. If this has not been identified, we have to know where. Definitely, if this has been not identified, there is a possibility that there will be a misstatement of profits. Is it? They have to. There is a risk that what there is a risk of that there is some fraudulent transactions. There is a risk of a fraudulent transaction. This risk has to be identified. Okay. If this is not identified, what will happen? There will be a misappropriation of misstatement of profit. What is the auditor response? What you will do?
Discuss with the management
Next.
about getting details.
Next.
Quantifying the risk of misstatements. Quantifying the misstatement.
If there are errors, okay, if there are errors, what you have to do? You have to increase the procedures. Okay, you have to increase the audit procedures. We don't know whether it is in one area, We have to know whether it has been affected only in one area or affected in other areas also. You have to do some more audit procedures, okay? Substantive testing. Is it? Now, when you are talking about, we have to conduct some more substantive testing in other areas, okay? Other areas with respect to accounting records. Anything we have to do? Relate to question number 1. Relate to question number 1. In question number 1, what we have done, we said that the auditors have to be professionals. Skepticism is there. The moment you sense that there is something is happening, is it right? You have to be very, very alert. Is that you have to be you should maintain a professional skepticism. Questioning mind should be there. Is it right? And you have to be very, very alert about any. We should not think that this is the only one case. We should think that what is the response. We have to explore other areas also. Is that maybe in other areas also there is any fraud and error that has been happened. Okay, we should not, simple words. The risk is we have to identify. If it is not identified, then we have to think what are the reasons. And if it is not identified, the profits will be misstated, overestimated or underestimated. What is the audit response? The audit response is you have to, the moment you identify there is a fraudulent things happening, you have to increase the substantive testings in other areas also. Is it? You have to increase the substantive testing in other areas, in other accounting records also. And once you are increasing the, apart from that, what you have to do, you have, as an auditor, you have to be maintain professional skepticism. Yeah, professional skepticism. And you have to be very, with respect to fraud and errors that may happen in other accounting records. Fine. That is the next one. What is the next paragraph? We will go in detail. Okay, we will go in detail. What they say? They say that there is a customer has granted a payment of how much? A payment of. Now, apart from that, the financial controller is going to sue the companies. Is that the financial controller is going to sue the company as such? What is the audit response for that? That is, anything is there? What is the response if the financial controller is you? You have to take the opinion of the expert lawyer. Is it right? You have to take the opinion of the expert lawyer, and you have to mention that is it going to succeed or not. Getting my point? You have to take the opinion of the lawyer, and you have to know what is the possibility and probability that this case may be successful. Is that this case may be successful? What is the possibility and probability? The moment any time any other person is going to sue the company, immediately what is the response? The response is you have to take the legal opinion. Is that? You have to take the legal opinion, and when you are taking the legal opinion, you should ask what is the possibility and probability that this legal case will be successful against the company or it will be in favor of the company. Possible and probable outcomes. We are not saying that it will be yes or no. We say what is the possibility, what is the probability that this will be in favor of company or it will go against the company. Next. Are you clear about this?
Yeah.
What they say?
Taking opinion from external lawyer, right?
Taking
legal opinion from external lawyer, not from the company itself.
Company lawyers will be there. Is it? Company lawyers will be there. Legal cell, legal department will be there everywhere. In the bank also there will be a legal department. Is it right? In the bank also there will be a legal department. We have to take the opinion from the legal department from within the company.
Okay.
Next. Finance director inform you that significant customer is granted payment break of 6 months. It has experienced financial difficulties. Maintains an allowance for trade receivables. Which standard we have to take here? IAS? Which standard we have to take? IAS?
IFRS 9, I think.
Estimate receivables provision. Provision. Receivables. IAS 36. Sorry, IAS 37. Provisions. Is that provisions, account, contingent liabilities, contingent assets.
I thought you were referring to trade receivables.
Pardon?
I thought you were referring to trade receivables.
Trade receivables only, I am telling you. Trade receivables only. All maintains an allowance for trade receivables. Is in anticipated that it will remain in the same level as prior year. When we say it is a trade receivables, when it is say provisions, it is IAS 37. Provision for provisions, contingent liabilities, contingent assets. With the same concept of IAS 37, we are working with the receivables. If we are going to say that yes, we are taking into consideration giving a 60 days private, is it? Whether it is reasonable or it is not reasonable. Fine. It is reasonable or it is not reasonable. Are you okay with this?
Yeah.
Next. What they say, they have returned on anything, maintains an allowance, and they said it will remain at the same level. The report out to management issued by Brooklyn, last audit report highlighted significant deficiencies in the purchase cycle. How much we have done, we should know. Is it right? We should know. We have calculated what? We have calculated inventory holding period. How much we have calculated inventory holding period? 2006, Mariam? How much we have calculated?
Was 41, I think.
Yeah, 41. Write down on paper, pen on paper, 41. Now, what is happening 2004, Gaita? 2004 is how much inventory? Holding period, closing inventory divided by cost of sales in times 365. Holding period is a closing inventory 1600. Is it 1600 divided by cost of sales is how much? Cost of sales is 17,300. 17,300 into 365. How many days are there? How many days are there? Fast. Very quickly.
34.
34. 1600 divided by 17,300 times 365, 34. What happened? 2004 it is 34 days. 2005 it has been increased to how much? It has increased to 41 days. It has been increased to 41. Means you are holding inventory for more number of days. Is it? When you are holding inventory for more number of days, definitely it will, what will happen? It will affect the purchase cycle. Okay, it is affecting the purchasing cycle. There is a risk that you are holding the inventory for more than its This year you are holding for more number of days. When you are holding for more number of days, what happens? There may be a issue with respect to the with respect to the uh, with respect to the quality, with respect to the expiry date, is it? With respect to the quality, with respect to the expiry date. We will see how they have interpreted this thing. Okay, next. We will see what the finance director inform you that the company intends to restructure debt. Is that the company instructed to restructure the debt? Is that how much is the debt equity we have calculated? How much we have calculated debt equity ratio, gearing ratio?
It was 54.
Pardon?
Approximately 54, I think.
54. And what is the gearing ratio for 2004?
Can you go down a little bit, please?
11,000 divided by 20,500.
53.
53. Gearing ratio has been reduced or increased?
Increased.
Increased. Is it? Gearing ratio has been increased. When gearing ratio has been increased, what will happen? The interest will increase or decrease? Interest coverage ratio. How much we have calculated interest coverage ratio?
2.5.
2.5. 2004, how much is the interest coverage ratio? 2004 interest coverage ratio is how much? 850 plus 250. Is that 850 plus 250? 850, 900, 1100. Okay, 1100 divided by what is the interest? 250. Is that 1100 divided by 250? 4.4%. Okay, write down interest coverage ratio 2000. This is the analytical procedures. This is the analytical procedures. In 2004 the interest coverage ratio was 4.4. In 2005 the interest forecasted is 2.6. Is it? Whereas the gearing ratio has been increased. Is it right? It has, how much is it? It is something 53.7, 53 to 56. Is it 50? What they are saying, they want to control. Is it? What they say? They say that they want to restructure the debt. Is it right? When you are restructuring that, you have to make sure that what will be the borrowing rate. Okay, what will be the borrowing rate? And see the thing, the interest coverage ratio is decreasing. Understand what? The interest coverage ratio is decreasing. Last year it is 4.4. This year it is 2.6. The interest coverage ratio is decreasing, means there is a increase in risk. We are not in a position even to pay the interest. Is it? Last year we have the position of 4.4. Now what possibilities are? Only through 0.3 times. The interest coverage ratio is decreasing. When the interest coverage ratio is decreasing, they are thinking about restructuring. Very slowly you understand this point. They are looking to consolidate loans to reduce the overall cost of borrowing. See, when the rate of interest coverage ratio is decreasing, the banks will be reluctant to give you loans. Simple concept. The bank will give loans on the salary. The banks will give loans. How many other loans are there with the customer? If they are having existing, they have loans. Further, banks will be reluctant to give loans, because what happens? the banks will find it difficult even to recover the interest. Is that even to recover the interest, bank will find it difficult. So when the interest coverage ratio is decreasing, the firm is unable, will find it difficult to pay the interest. Is that they find to pay the interest coverage ratio should be on the higher side but not on the lower side. Is that it should be on the higher side but not on the lower side. What you have to do? You have to evaluate. You have to review the terms and conditions of the loan, and you have to review what are the reasons why interest coverage ratio is decreasing. Fine. This is the one point. Second one, what they say, as a result of structuring of debt, Harlem has not paid its shareholders a dividend. Is that they have not paid dividend, choosing instead to undertake a bonus issue. Very interesting. Accounting, you should have a very good comprehensive understanding. Yeah, good comprehensive understanding. What happens? They are not paying the cash dividends. What they are doing? They are paying the bonus issue. They are in place of the cash dividends. They are issuing what? They are issuing the bonus issue. Is that there is a risk? Is it right? The risk is we have to disclose it. Why they are not paying dividends and why they are in place of dividends, the reasons of issuing a equity. Okay, bonus shares of equity. Fine, we will cover this again in detail. You are being asked by the audit manager to complete the preliminary analytical review she has provided with respect to these things. Fine. Okay, we'll come to this again once we have done this. What is the point number D? Okay, point. Discuss the substantive procedures with respect to valuation of receivables. What are the first thing we have to do with respect to valuation of receivables?
Sending confirmation.
Yes. What they have done, see the thing, valuation. There is a problem. There is an issue here. Valuation is affecting because they have said that 10% returns. Now they are reducing it to 5%. Because they are reducing to 5%, definitely there will be some reasons. Is that we have to discuss with the finance director or the management what is the rationale for not increasing the allowances. Previously they say 10%, now they are decreased to 5%. The problem, the issue comes here only. They are reducing the margin for sales returns. When they are reducing the margin for sales returns, it will have impact on the recoverability, it will have impact on the cash flow position, it will have impact on the dividend payments, everything it will have an impact. Then automatically you are not recovering the cash on time. Definitely it will affect the cash transaction that has to be done in future. First thing, is it right? Second one, what we have to do whenever there is a valuation, is it right? Whenever there is a valuation, you have to take opening balances. Is that you have to take last year what are the assumptions we have made, and this year what are the assumptions we have made with respect to valuation. receivables. What is the only assumption what you are making? The only assumption is non-recoverability. What is the last year non-recoverability rate, and what is the this year non-recoverability rate? Is it? And what is the reasonableness? What are the assumptions? Sufficient and appropriate evidence. Is it? Next. Anything about receivables? Anything about receivables?
Analysis of the aging of receivables.
Good, exactly. Analysis of aged trade receivables. Is it? Who are paying slow, who are not paying, who are not responding. Is it right? Receivables. Analysis of aged receivables. Receivables. See, you have to identify the keywords. When you are doing the things, you have the aged receivables, who are slow moving, who are old balances, who are the balances who are not responding. Is that whether the credit, whether we have anything we have received. Is that just we should not close down by 31st December. Okay. What is the reporting date? Reporting date is 31st October. We should not stop at 31st October. We have to see before we come to a final point, we have to take into consideration after date any cash receipts, valuation, net valuation, the final amount we have to take into consideration of, we have to review any cash receipts we have been received after the cutoff date. Next, anything else?
Doing analytical procedures, comparing the gross margin,
regarding
evaluation of receivables, the gross margin analysis.
Gross profit margin. Is it right? What is the gross profit margin of last year and what is the gross profit margin this year? Whether we have, why we will do that?
To verify if there is misstatement in sales and receivables.
Okay, write down. We will see. We will see what is the suggested answer. Okay, we will see what is the suggested answer regarding gross profit margin of current year with the gross profit margin of the previous year. Whether we have classified and posted correctly or not. Next, anything else?
Also, we can compare the percentage of ECL from the top line, the revenue of the company, and compare it with the previous year.
Yes, definitely. Write down the things, okay? Write down the things and we will match. Okay. Another thing, don't think that whatever the, even I don't know the suggested answer, okay? Don't think that whatever we have written that is not there means we have written something wrong. No. There is only a suggested answer. Just cross verify whether what are our thinking and what are they thinking as such. Okay, what are the things with respect to the receivables valuations? Fine. They have given 3 marks. 3 marks means 3 points. Isn't we may discuss more number of points, but we have to write only 3. Next, what with respect to the disposal of non-current assets? Disposals. Yes, Laila and Gaita. When you have sold off, assume, think. I'm always saying this is the most important. Think you are selling assets. What you will do first thing? What you will do first thing? Pardon?
The sale agreement.
No, when you are selling, you should know which assets you have sold. Is that which assets you have sold? You want to know specific details of the assets sold. Is it right? You have. Once asset is sold, you will remove it from where? You will remove it from the non-current asset register. I told you so many times. The first thing is whenever you are purchasing or whenever you are disposing of, the first source of document, till now I have told about purchases. The first thing, the moment you purchase, you will show in the non-current assets register. When you are selling it off, is it right? You have to selling it off. First you have to remove from non-current asset register only. Is that you have to remove that it has been disposed of. Is that from the non-current asset register. The second thing, what you will do? Anything, tell me.
Inspecting the invoices and the sale agreements.
Yes, inspecting the sundry sales invoices of the disposals which you have done with supporting evidence. Exactly, good. Is it? Select a sample of disposals and you have to agree with the proceeds. Is it? And you have to see what is the documentation. Next one.
Recalculating the proceeds from disposal.
Calculate proceeds from the
Disposal.
casting. Okay, you can put it like this: casting the receipts from the disposals from the to the sales ledger account. Next,
Reviewing the PPE schedule. to ensure that
depreciation, very important. Is it right? Whenever you are disposing of any asset, you have to recalculate the depreciation charge. Okay, you have to recalculate the depreciation charge for the disposal of the assets. Is that for the disposal assets? Policy will be there. You calculate the recalculation on the depreciation charge on the sample of disposals. Okay, next, anything else?
assessing the reasonableness of the disposal by comparing the same with the depreciation policy and depreciation rates.
Okay, okay, we have to compare with the when we have calculated the recalculating the depreciation, we have to follow the depreciation policy and we have to match it whether we have done in agreement with the depreciation policy. Anything else?
Reviewing the schedule.
Last
property
one.
plant
Last one.
Disclosure.
Disclosure. Is that last one is disclosure. You have to review the disclosure. Is it right? In the draft financial statements to make sure that it has been done as per IAS property plant, IAS 16 property plant and equipment. Keep it in mind when you are talking about the write down. This makes the real difference. If you are saying property plant and machinery IAS 16, if you are making the provisions IAS 37, if you are talking about the impairment IAS 36, yeah, the moment you are writing these things, it makes the real difference. Okay, now we have done this. Okay, the responsibilities, the ratios, the audit risk and audit response. Why I told you to write down, so that you should cross verify what we have assumed and what we have, what is there in the suggested answer. The moment, even I am telling you very clearly, even it is matching more than 50%, even our expectations and their expectations are matching more than 50%, means more than 50% of the points, that is well good enough. Is that well good enough? Is that? See the things. What they are saying, The first one, audit responsibility, the fraud. Is it right? Obtain. These are the important points. These are the points. In the examination, before examination, when I am sending you this file, okay, before examination, you just have a marking guide. Don't read everything in detail. Is it right? What is the responsibility? You can expand this, okay? You can describe this in your own words. These are only main points. Main is that obtain reasonable assurance that financial statements are free from material misstatements. Identify and assess risk of misstatements due to fraud. Is that obtain sufficient and appropriate evidence. Take the easiest ones. Obtain sufficient and appropriate evidence. Maintain professional skepticism. Discuss risk and fraud with engagement teams. Okay? Discuss response appropriately to fraud and error. In this point, we have written IS 240. Is that IS 240 has been clearly mentioned that the responsibility of the auditor towards fraud and error. Is that the responsibility of the auditor towards fraud and error? You have to make sure that you have to write IS 240 here. Got my
We
point?
just try these points without explaining further. So they will be able to,
No. Describe. Is that we'll come to this. This is only a skeleton for us. Okay. These are only skeletons. See the thing. Auditors conduct an audit. This is your answer. Auditors conduct an audit in accordance with IS 240, responsible related to fraud in an audit of financial statements. Government responsible for obtain. What is the auditor responsibility? Obtaining reasonable assurance that the financial statements has taken as a whole for material mistake. They want only reasonable assurance, okay, whether caused by error or fraud. In order to fulfill this responsibility, the auditors is required to identify and assess. Very important. Of material misstatements. What in order to fulfill the responsibility, what is the external auditor is required to identify and assess of risk of material misstatements. Yeah, of where material misstatements? For financial statements. What they say, the auditor needs to obtain sufficient and appropriate evidence. Is that regarding the risk of material misstatements due to fraud and error. Okay. Now they have mentioned is there. What the auditor will do? He will design, he will plan, he will implement his own things. Is that he has all the flexibility to work on his own. Is it right? In addition, the auditor must respond appropriately to fraud and suspected fraud during the audit. If something goes wrong, you will identify. Think you are an auditor. Exactly. Think you are an auditor. If there is something has been happened, if you have identified something, is it that there is a fraud? Is it? You have to respond appropriately during the audit. Third thing, when obtaining reasonable assurance, the auditor responsibility is to maintain professional skepticism. Is it? Throughout the considering the potential of management override of controls. Is it? Is it professional means you should not give that space to the management, and recognizing the fact that procedures which are effective in detecting error may not be effective in detecting fraud. Error defective is fine. We can identify errors, but keep it in mind, identifying fraud is little bit more difficult. Is that identifying fraud is little bit more difficult. You can identify errors. Is that because fraud errors have done unintentionally. Fraud is done intentionally. And the fraud is not one person. Fraud will be a collaborative, a tacit understanding between more than two different people. Is that's very important? Is that detecting which are effective in detecting error, but not be effective in detecting the fraud as such. To ensure the whole management engagement team is aware of risk and responsibility for fraud and error, ISA 240 IS 240 requires that the discussion is held within the teams. Members not present in the meeting, the partner should determine which matters should be communicated to them. Last point, very important. This is the importance of this is the responsibility of the auditor. What is the responsibility of the auditor? That every member of the audit team should be aware about the responsibilities related to fraud and error. If somebody is absent, somebody is not present, it is the responsibility of the audit, the engagement team, to communicate with all the auditors what happening. Today I am not coming, okay? Tomorrow will come. But today whoever is present, they will share the things what happens during the audit. They will share what these are because tomorrow the person who is absent today will attend audit procedures, audit at the client's place. He should be well aware that what has been happened and what has not been happened. 4 points, just remember this, okay? 4 points, read this again. We have calculated. Can you go to the next one, please?
Yeah.
They have calculated 4 ratios for both 4 marks, okay? We have calculated 4 marks. Stand alone exclusively for this, okay? Please check the answers what we have done. Please check the answers what we have done. In the examination you can do, okay? You can do, okay? You can do like that. But keep it in mind, these formulas you have to remember. Okay? Now, what is the audit risk? It is a lengthy one, 16 marks. Is that 16 marks? There will be one question in the examination. I am telling you on record. What is the audit risk and audit response? Audit risk and audit response, one question will be there. Okay? The finance director is planning to reducing the estimate return rate for goods sold, a sale or return basis from 10% to 5%. Discuss the basis of revised assumptions with the director. That is the first point, okay? That is the first point. I am giving a different colors, okay? Then what you have to do? You have a review, a period. This is the point number 2. Is the 60 days to quantify the level of returns on a specified period, and this is point number 3. Is it compare this to the risk assumed of 5%. Discuss any significant variations with the finance director. First you have to discuss, then you have to review, then you have to compare. What it says, we have not referred this, is that we have not. See, IFRS 15, contract from revenue, revenue from contracts that customer provides, revenue and cost sales should be accounted to the company, foresee that goods will not be returned. Is that IFRS 15, 5 steps. I told you, yes or no? Yes or no?
Regarding what?
IFRS 15, 5 steps are there. I told you.
No.
Listen carefully. Write down. If you want, you can write down. IFRS 15 revenue. Okay. The first one is the contract. Okay. The second one is the obligation. The third one is the price. Okay. The fourth one is allocation. And the fifth one is recognition. The first one is terms and conditions. Is it terms and conditions regarding the contract? The second one is obligations. The third one is performance. The fourth performance and price. Obligation, price. Okay. The third one is the price. The fourth one is the allocation, and the fifth one is recognition. COPAR. COPAR. Don't write all those things, okay? Just for your understanding. Tomorrow you will ask me what is COPAR. Just giving you a simple background information. That's all. What it says is that this is the audit risk. Is that if the goods which may be returned, the company should recognize as a refund liability. Is that as a refund? If after 60 days the goods are not returned, then liability is reversed and revenue is recognized. They say that it is 60 days. Is that till 60 days you have to identify it as a liability. Otherwise, what will happen? You should not carry the things for a longer period in the financial statement. By reducing the return rate, there is a risk that revenue and cost of sales may be overstated. Is that? See what is happening? See, 100 is there. I am telling you very clearly. 100 reals is there. Previously 90, 10% returns. Net is 90. Now you are saying 5%. What happening? 10 minus 5, 95. Is that? Revenue is increasing, profits will decrease. Is that? Revenue is, what is the net revenue? 95. The net revenue is 95. Definitely, profit will be more. Okay, net revenue is now on the other side. Net revenue is less. Is that they are expecting 10% as returns. Automatically, revenue will decrease by 10. What will happen? You are going to understate the profits. Means by doing this, there will be a overstatement or understatement. Fine. First point. How many things are? 3. You can write in your own words. Okay. You can write. This is suggested answer. Second one. The company purchased a patent at the end of the year. Useful life is 4 years. Intangible asset. Limited life. Is that? Intangible assets, limited life. When there is a intangible assets and a limited life, it is which charge it is going to happen? It is going to be amortization. Agree the useful life 4 years with supporting documentation. First point. The amortization should be calculated and appropriate general adjustment discussed with management. Is it right? This is the first point. What is the first point? You have to agree the life of the asset. The second point is that the amortization should be charged, calculated, and the general entry has been made. And the third point, what is it? The third point, in order to ensure the accuracy of the charge, that the intangible is correctly valued at the year end. Simple. It is the intangible assets with a limited life. It is a amortization charge. In accordance with IS 38, you have to write this. Is that? You have to mention this in the examination. The intangible should be amortized over 4-year life. if it does not appear that management has correctly accounted the amortization. Intangible assets and profits will be overstated. If you are not amortized it, you have not reduced the value of intangible asset, definitely your profits will be overstated. Surplus plant and machinery was sold, resulting in a loss of disposal. Recalculate the loss on disposals and agree with the terms, and always make sure there will be a supporting documents. Always make sure there is a significant. We have to write 8. Okay, how many they have given we don't know. So first check, they are given more. Is it right? So many. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 they gave. 19. Okay, they gave so many 19. We have to take only 3. Oh, sorry, only 8. Okay, now I am just making sure the report to the management issued of the prior year audit highlighted significant deficiency in purchase cycle. They was said that there is purchase cycle. The purchase cycle has not been that much accurate. Okay, not been that much accurate. Discuss with the management whether purchase. See what happened for inventory. Is that inventory number of days has been increased in 2005 compared to 2004. Okay. The implemented success, if so, undertake test of control to assess the operation efficiency. If the control, once again I will read, okay, discussed with management whether the purchase cycle recommendation suggested by Brooklyn was implemented successfully this year. If so, if they have implemented, undertake test of these controls, whether they are operating efficiently. If controls are not in place or operating efficiently, adopt a fully substantial approach. Is it fully substantial approach? Simple things you take. They are asking that you have to give reference to the ratios. They have mentioned the restructure the debt finance. The interest coverage ratio has been decreased. I say it is not healthy for the company that the interest coverage ratio is decreasing. And the level of gearing has increased. One side interest has been decreased, one side gearing has been increased. Loan has been increased. In order to maximize chances of securing debt, Harlem will need to present financial statement which shows best possible position of performance. Is that best one? The interest rate is decreasing, the worsening interest rates, gearing ratio has been increasing. Is that gearing ratio has been increasing, the risk that directors may manipulate financial statements. Because we are talking in terms of fraud and error by overstating profits and losses. What happening? See, the interest rate has been decreasing, the gearing has been increasing. Is it? Because of that, what will happen? You are putting, if you understand one thing, is it? I just want to make sure, if you understand one thing in the question, see how they say, they have clubbed long-term and short-term borrowings. Actually, it has not been done so. Long-term should be shown separately, short-term should have shown separately. Is that long-term and short-term should be shown separately. The moment we are showing it combinedly, we are not getting a clear idea. Is that we are not getting a clear idea. The calculations are misrepresented. Is that the calculations are misrepresented. So that is one of the reasons, is it right? I don't know whether they have written this or not, but definitely they would have written 100%, is it right? They would have written. There is that what they have been mentioned. No. And this, you see this point, I'm putting with green, okay? I'm putting with green. The same thing regarding the interest coverage ratio and gearing ratio. Brooklyn company should ensure that there is a suitably experienced audit team. Also, adequate time should be allocated for team members to obtain an understanding of the entity and significant risk of overstatement of profits and assets and understatement of debt. So many, they have put so many points together, okay? So many points together, and assets and profits and assets and understatement of debt, including attendance at the audit team briefing. 1 minute. The team needs to maintain professional skepticism and alert increased rate of manipulation. Okay, that's fine. We are not debating on that. Significant estimates and judgments should be carefully reviewed in light of misstatement risk. That's very important. Okay, whenever you are reviewing, okay, whenever you are reviewing the gearing, you should have a significant estimates. What are the estimates with respect to the increase in the gearing ratio, and it will have impact on the interest coverage ratio. See, two things are very clear. The debt has been increasing, the interest coverage ratio has been decreasing. In future, they will be not in a position to pay interest also. Yeah, they will not be in a position to pay interest also. That is what we have to understand. Another point, they say that issue of shares during the year via bonus issue. No cash movements. Understand, but there is no cash movement. Share capital within equity increases, value of the shares, and reserves will decrease. Definitely, is it? Your share capital is increasing and reserves are, you are issuing only bonus shares. Is it right? Review the treatment of bonus shares, is it, and agree to the increase in the number of shares. Is that review the treatment of how you are treating, what is the ratio of bonus shares, okay? And once you are issuing the bonus shares, you identify how much has been increased in the share capital. Is right? And agree that the corresponding reduction in reserve. Once you are issuing the bonus shares, you are issuing from the reserves. Okay? You one side your equity is increasing, one other side your liability is decreasing. Correspondingly, the impact is happening on both the situations. Is that both the situation? If the company has not accounted for a bonus issue before, there is a risk that it will be incorrectly treated with equity. Legal issues may arise if shares have not been issued in accordance with the company's statutory constitution. See, again, what they are saying, they say that this is the first time they are issuing the bonus shares. Is it the first time they are issuing the bonus shares? If they are issuing the first time we issue the bonus shares, that we have been treated as per the equity or not. Is it right? Next, when it has been treated in equity or not, see what happens. Shares are there. You have the authorized capital. Is that you have the authorized capital? You have the paid up issued capital. then you have the paid up capital, then you have this, you have the subscribed capital. Is that means whether we are, if you are saying that 1 million shares, 10 million shares, if you are saying that 10 million shares, even after issuing the bonus shares, should not cross 10 million. Are you understanding little bit? See, you can understand there is a lot of financial accounting concepts has been incorporated here. What they are saying, when you are talking about the bonus shares, review the board meetings. It has been approved and authorized by the board 100%. Unless this is the decision, they will be taken by the board. Dividends, decisions will be taken by the board. Any strategic things, decisions will be taken by the board. Any huge amount, decisions will be taken for authorization and what are the terms of bonus issue. If transactions has been conducted with line as approved, review the statutory constitution requirements. What is the company policy saying? Is that statutory? What is the authorized capital? Is that you have 4 levels: authorized capital, issued capital, subscribed capital, and paid up capital. Okay, whether we are within the range or not. Additional bonus issue requires disclosure. If you are issuing the bonus shares, anything we require disclosures in the financial statements, in the notes to the account. Are you clear about this? These are the audit risk and these are the audit response. If you take the things, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Again, when you are revising it, just keep it in mind as I am suggesting this. Take any 8. Read the scenario first. Take any 8. Understand yourself and type it again. Okay, understand yourself. Take the simplest one. Disclosure should be at the end. Okay, disclosure should be at the end. First opening balances will be in the beginning. Okay, the first opening balances will be in the beginning. Go by paragraph. Go by paragraph. And once you are doing for every audit risk, you should have an audit response. What we have noticed, what I noticed is, here they have mixed so many points. Is it? They have combined so many points. Take the simplest of the simplest, work in the order. Is it clear to you?
Yeah.
Here I have, see the thing, and whenever we are doing this, okay, I have taken, whenever you are doing this, keep it in mind, whenever we are calculating the ratios, they say that in relation to this, is it? In relation to this, we have to mention. I am giving you, I will take another example. I am taking a little bit more time on this, I know. You take this one, Harlem company. Is it? I'm highlighting this. Production problems which have affected the quality of the significant batch of tires. What happened? The inventory holding period has been increased from 34 to 41 days. What is the response? Discuss with the finance director whether they have any write-downs. Means any defective tires are there. Is that any defective tires are there? For those defective tires, they have written any write down. Those defective tires, they have made any corrections or not regarding the quality of the tires. See, because of that, see what happens when the when the production is when the production cycle has been increased. Okay, production cycle has been increased from holding period has been increased from 34 to 41 days. What is the reasons? What are the reasons why we are holding for more number of days? Definitely there is, if your inventories you are holding for more number of days, the sales is not that much. If there is no quality test, people will not purchase. Is it? That is one thing. Now, similarly to that, they are talking in terms of what? They are talking in terms of receivables. See the thing. Last year they have used to recover within 38 days. Now the receivables has been increased to 51 days. A significant customer has granted 6 months payment break. And the receivables collection period increased from where? Because you are increasing the things from 60 to 80 days, 180 days, the receivables has been on an average, the receivables period has been increased from 38 to 51 days. And allowance of receivable has stored. We are not changing the allowances. Is that provisions? We are not changing. We are changing only the number of days to a significant, to a particular customer. Is that? And it is anticipated that it will remain in the, means whatever the last year provision we have made, the same provision we are continuing, same allowance we are continuing, but we are changing the number of days. Automatically what will happen? There is a mismatch. What we are do? We have to have three things. First, review the test of controls. Who has authorized? Is that? Review the test of surrounding how the file identify old potential receivable balances and credit controls. If you are giving a extension of the credit to a specific customer, see whether it has been done by the at the highest, at the appropriate level. Discuss the rationale why we have not changed the allowances. Discuss the rationale, discuss the assumption, discuss the reasons why we have not changed the allowance, why we kept the same allowance despite increase in the collection period. See, when you are increasing the collection period is increasing from 38 to 51 days. It is not a positive message the company is getting from receivables. Means we are getting delayed recovery. When there is a delayed recovery, definitely there will be possible losses also. Is it? This way. Extend post year end cash receipts. Is it? We will see what will happen. You instead of checking, instead of verifying for the next 10 days, you will increase for 20 days. You increase from January to 1st to January 25th. So you see any delayed receipts are there or not. Is that any delayed receipts are there or not? Whether you are aged receivables are, if you are increasing to 38 to 40, 51 days, definitely the receivables are becoming older, the receivable becoming aged. There is a possibility that we are not going to recover on time. Is that? These are the audit risk and this is the audit responses. Are you clear about this?
Yeah.
See, keep it in mind. I know, I can understand. Is that? Take any 8 which are simple, which are easy. Don't change the sequence. Sequence is very important. Okay, sequence is very important. Whichever. Next, whenever there is a calculations, keep it in mind. You have to reflect that calculations in your explanation. Is that? You have to reflect that calculations in your explanation. Okay?
Okay.
Here they are asking 3 points, okay? 3 points in receivables, 3 points in disposals, okay? 3 marks for receivables, valuation, and 3 marks for disposals of things. Fine. Now, what they are mentioning in totality, the first one is with respect to valuation. Discuss with the finance director for not increasing the allowances for trade receivables. Is that, see, they are saying that if you are increasing the number of days, they are made very strategically that allowances has not been increased. If allowance is not increases, valuation will get affected. Is that the first part? Obtain a breakdown of the opening balances. Is it? And see what happens in the previous year. Is it right? And what happened to the previous year? What they have done with the previous year and what they have done with the current year. What is the previous year allowances and what is the current year allowances? Okay, what we have done with previous year, what is there any consistency or inconsistency? Second point, review the aged receivables. Is it? Review the aged receivables to identify what are the slow moving, what are the old receivables, and we have to make sure that you have to check the status of these balances with the credit controller. Why it has been not received? Is it right? Discuss the aged receivables. Why which are slow moving, which are old receivables, people who are delaying. Is that we should not come to a conclusion that some people will delay, some people will default. Is that some people are on time? Okay, we cannot put everyone in the same on the same platform. Okay, we have to identify who are the aged or old aged receivables, and we have to focus on them. Review whether there is any after date cash receipts. See how many times we are going to cover this again and again. Whenever we are talking about receivables, after date cash receipts. Is that if we have received, because reporting date is 31st October, you will have minimum 4 months. At least next 2 months, 1 month, we should say whether we have received any delayed payments by the customers. Review customer correspondence with significant customer who has been and others. Any disputes are there. We have done this in our lecture. Is it 10.C we have done. Okay. If there is any disputes will be there. Sometimes because of disputes people will not pay, and it happens. 100% it happens. Is that yes? Why when it is disputed? Why you will pay? You will say that dispute will be settled down. Then only we think about the payment. Is that we have to have a correspondence with them. Review board meetings whether there is any concern with respect to payments by customers. If any amount, material amount is there, definitely in the board meetings that issue will be taken up. Any huge balances, any huge outstanding amounts are there from any customers, definitely it will be a point of discussion in the board meetings. Review board meetings, anything is related to receivables. Okay, calculate the potential trade receivables which are not recoverable. What is the percentage of losses, write-offs? Is that what are the percentage of write-offs? And you have to discuss with the management. See, I will add something more here. When you are saying that potential level of trade receivables which are not recoverable, compare with the prior year. Compare with how much you have written down last year and how much you are writing down this year. Then we will understand whether we are writing the losses, irrecoverables are more or irrecoverables are less. Okay, and assess whether it is material. The same thing I have explained. The same thing has been there. And material or not, and discuss with the manager. Fine. These are with respect to the receivables. What is respect to the payables? Sorry, plant and machinery disposals. You have to, whenever we are disposing of, you have to make sure that which machineries has been disposed of. Is it which machineries has been disposed of? Once you have disposed of the machinery, it has to be removed from the non-current asset register. Is that once you have disposed of the machinery, non-current. Selected disposals and agreed whether sale proceeds and supporting documents such as invoices, which has been sold, okay, which has been sold. What are the, how much we have received, and what are documentations, what are the asset documentation as well as the invoices. Recalculate depreciation charge for a sample of disposals, that whether we have done we have calculated depreciation or not. There will be some rules will be there. What they have said, in some cases they will charge on pro rata basis, time basis, okay. Sometimes they will say it is, if a asset is sold, you will calculate depreciation for full year. Company policy, I will not say this, is that we have to confirm calculations and correctly applied as per the company policy. You can just work till now, that's more than sufficient. Is that the more you are going further, you should have more clarity on that. Review the disclosures of disclosure is presentation of disposals in the draft financial statements. Always keep it in mind whenever you are talking about the disclosures, you have to make sure that it has been disclosed in the draft financial statements to ensure that as per in line with IAS 16. Fine. Little bit lengthy question, 30 marks question, 54 minutes. Is that lengthy? Is that, again I am saying, okay, from what we have done, a complete comprehensive, is that the responsibility of auditor towards prevention and detection of fraud. Is that 4 marks, 4 points. Then they have calculated the ratios. Is it right? 4 marks, 4 ratios. Okay. Then they have talking about the audit risk and audit response. 8 audit risk and 8 audit responses. Little bit challenging. Okay. But very simple. If they are reduced, 4 ratios, you can write for these 4 ratios, write 4 audit risk. That gross profit margin has been decreased. Okay, gross profit margin, where we have done, we should have mentioned that somewhere we should have done where the gross profit margin. They have mentioned anyway gross profit margin.
Yeah, I think.
Where? No. Fine. Okay. Okay. 4 points, 4 ratios, 4 points. Okay. 4 ratio. Straight away 4 questions. If ratio analysis is given like this, it means it is the easy paper. Is it? It is the easy paper. And when you are writing calculating the ratios, you have to give reference the ratios in the audit risk and audit response. Fine. These are so many, a comprehensive of 15 are there. Don't get in a panic mode that we have to write 15. I am telling you very simple. Take the simplest of the simplest 8. Focus on that. You can read all. I am not saying that. I am not stopping you from reading, revising. But select the best 8, which is easy and easy to work it out. Fine. Next. Then you will have the valuation of receivables, substantiate procedures with receivables and plant and machinery. Is it okay with you?
Yeah.